Hey everyone, welcome back. Today we're diving into the world of finance,
Yeah.
but with a bit of a twist. We're going to be talking about the power of investing early, like really early.
That's right. And honestly, the sooner the better. It's all about that compound growth.
Okay, so we're working with a report from Lumis Capital. It's called Climate Finance on Track to Grow from $100 billion to $1 trillion.
Mm-hmm.
It's got some really interesting points about how starting your investing journey young can, make a huge difference.
Huge. Because compound growth. It's like, imagine a snowball rolling down a hill.
Okay.
It starts small, right? But it just keeps picking up more and more snow as it goes.
Ah, I see.
And by the time it gets to the bottom, it's massive.
So you're saying that's kind of like what happens to your money
Right.
when you start investing early.
Exactly. The earlier you start, the more time your investments have to kind of snowball and grow exponentially.
And the report actually mentions that even like small regular contributions can grow into a pretty substantial nest egg over time.
Oh, absolutely. Like, even if you're only putting in like $50 a week, starting at 25, it can potentially grow to over $250,000 by the time you retire.
Wow, okay. That's kind of mind-blowing. But real talk, doesn't the thought of investing sometimes feel like intimidating? Like, especially if you don't have a ton of money to throw around right now.
Yeah, I get that. But here's the thing. You don't need a huge amount to get started. It's more about like building that habit.
So it's more about like consistency over time.
Yeah, exactly. Like making regular contributions, even if they're small.
Gotcha. So it's not about like making one big investment and hoping for the best.
Nope. It's about playing the long game. And the Lumis Capital report, they really stress this idea of starting early for psychological easing as well.
Psychological easing. Okay, that's a new one.
Right. It's basically about like when you start investing early, you're not just building wealth, you're also building the sense of security, like control over your financial future.
Okay, yeah, that makes sense.
So later on, you're less likely to feel stressed or overwhelmed about catching up because you've already got that foundation.
Like a safety net, sort of.
Exactly. And it's not just about feeling secure either, it's also about flexibility.
Okay.
When you start early, you've got this longer time horizon, and that gives you more room to maneuver. Like maybe you can explore some higher risk, higher reward opportunities.
Ooh, now you're talking. Calculated risks. Tell me more about that.
Well, basically, when you have more time on your side,
Yeah.
you can afford to be a bit bolder with your investments.
So like if I'm in my 20s and start investing now, I could maybe explore some of those potentially higher growth investments because I have more time to bounce back if things don't go perfectly right.
Precisely. But it's not about being reckless. You still got to be smart about it.
Of course.
It's about understanding your risk tolerance and making informed decisions based on your goals.
Makes sense.
Yeah.
So starting early kind of gives you a longer runway.
Yep.
Makes those financial takeoffs a little less scary.
That's a great way to put it. And that's something Lumis Capital really hits hard. They even talk about how understanding financial principles from a young age, it's just as crucial as earning an income.
Oh, yeah. They were talking about building that, what was it? A foundation for your financial health.
Exactly. They compare it to like building a house.
Right.
You wouldn't want to build a house on like shaky ground, right?
Absolutely not.
So why would you build your financial future on shaky financial literacy?
And it's not even just about understanding the really complex stuff. It's also about the basics. Budgeting, saving, debt,
Absolutely.
all that good stuff. Like those are the building blocks.
Exactly. And the earlier you get a handle on those things, the more confident you'll feel about managing your money in general.
Right. It's all connected.
Yeah.
Whether it's like everyday spending decisions or planning for some big life event down the road.
Totally. That's what sets you up for success in the long run. It's not just about the numbers. It's about that knowledge and confidence to make good choices.
Choices that like actually line up with what you want and what's important to you.
Exactly. And it all starts with taking that first step, even if it's a small one.
So we've talked about a lot of the benefits of starting early and how those small, consistent steps can really add up over time. But I'm curious, what do those steps actually look like? Like, where do you even begin to build that financial foundation?
Yeah, that's the million-dollar question, right?
Right.
And Lumis Capital, in their report, they actually break it down into like 3 main areas.
Okay.
Smart spending habits, cultivating a saving mindset, and then building investing confidence.
Got it. So let's start with that first one, smart spending.
Okay, so smart spending. It's not just about, cutting back on lattes or anything like that.
Because I was going to say, there's got to be more to it than that.
It's really about making conscious choices with your money being
That,
aware of where it's going.
mm.
And Lumis Capital, they really stress the importance of understanding your own spending patterns.
Oh, when
Like actually looking at where your money is flowing and asking yourself, like, does this actually align with my values and goals?
So it's like taking inventory almost.
Yeah, exactly. Seeing where you can maybe make adjustments, maybe redirect some spending towards, those long-term goals.
I like that.
Yeah.
So instead of buying like that new gadget that you don't really need, maybe you put that money towards a trip or something that you've been saving up for.
Exactly. And that actually brings us to that second area, cultivating a saving mindset. And Loomis Capital, they suggest starting small, even if it's just a tiny percentage of your income.
There's that saying, little drops of water make a mighty ocean.
Oh, I love that.
It's all about consistency, right?
Absolutely. It's that habit of setting aside money regularly, even if it doesn't seem like a lot at first.
Right. And then as you earn more, you can increase how much you save.
Exactly. So you're building that muscle, basically.
I like that. Okay, so we've talked about smart spending and saving, but what about investing confidence? Like, how do you actually make that leap from saving to investing?
Well, Loomis Capital, they're big on the idea of early exposure to like financial concepts. They
Hmm.
say the sooner you start learning about investing, the more comfortable you'll become, you know?
It takes the mystery out of it.
Yeah, exactly. Because honestly, I think a lot of people are just intimidated by all the jargon and the, complex
It
strategies.
can definitely feel overwhelming,
But the truth is, investing doesn't have to be that complicated.
right?
And there are tons of resources out there, like, Loomis Capital offers some great ones
Oh, yeah.
that break down those concepts in a way that anyone can understand.
So it's about like empowering yourself with knowledge.
Exactly, because once you understand the fundamentals, then you feel more confident about making decisions.
Right. And then you're more likely to actually take action, like opening that investment account.
Exactly. And I think the big takeaway here is like demystifying finance,
Hmm.
making it feel accessible to everyone, no matter your background or how much money you have. It's about giving people the tools to take control.
And it's clear that Lumis Capital, they're really walking the walk. I mean, this report on climate finance, it's a perfect example.
Oh, for sure. They're really committed to making a positive impact, not just financially, but, environmentally as well.
Yeah. And it's not just about the big picture stuff either. They also have like a ton of resources on their website.
LoomisCapital.com, right.
Yes, to help, individuals make those informed decisions.
It's like having your own personal finance guide right in your pocket.
So if you're feeling inspired and ready to, take charge of your financial future, definitely check out lumiscapital.com. There's a lot of great stuff on there. But before we wrap up this whole deep dive, there's one more thing I want to explore. It's this idea of consistent investing for long-term success. We'll be back in a moment to dig into that. So we've talked about starting early, smart spending habits, taking calculated risks. It seems like consistent investing is really the key to all this.
Oh, yeah, for sure. It's tempting to think you can like time the market perfectly. Right.
Or jump on the next hot stock.
Become a day trader or something.
Right.
Yeah.
But honestly,
Mm.
it's that steady, disciplined approach, that consistency, that really builds wealth over time. Like Lumis Capital, they actually warn against trying to time the market in their report.
Really?
Yeah, they're like, it's basically impossible to consistently predict all the ups and downs.
So not about becoming like a stock market psychic.
Nope. It's more about setting a plan and sticking to it.
Yeah.
Making regular contributions no matter what the market's doing at any given moment. Lumis Capital calls it a systematic approach.
Okay. So it's more of a marathon, not a sprint.
Exactly. And when you think about it, when you're investing consistently, you're kind of taking advantage of those market fluctuations anyway.
Oh, how so?
Well, like when prices are down, you're buying more shares for your money.
Oh, I see.
And then when prices go back up, those shares are suddenly worth more.
It's like built-in averaging.
Yeah, exactly. Smoothing out those highs and lows, especially when you combine that with diversification, like we were talking about before. Okay, this makes a lot of sense. But when we talk about long-term success, how long are we really talking?
That's the cool part. Lumis Capital really emphasizes that real wealth, it takes decades to build, not months, not even years, decades. The longer your money's invested, the more that compounding can really work its magic.
So those consistent contributions, it's almost like planting a seed,
Mm.
Might not look like much first, but if you nurture it, give it time, it can grow into something amazing.
I love that. And it doesn't just build wealth, it actually helps mitigate risk over time, too.
Because if you're invested for the long haul, you're less likely to panic when the market takes a dip.
Right. Loomis Capital points out that this can make investing a lot less stressful emotionally.
Yeah, you're not constantly checking your portfolio, freaking out over every little
We're
headline.
playing the long game. You trust the process.
Exactly. Knowing that over time, those investments are going to grow and get you where you want to be, that peace of mind is huge. I got to say, wrapping up this deep dive, I'm feeling pretty empowered. It's like, okay, I can actually do this. You don't have to be a financial whiz to take control of your finances.
It's all about taking those small steps, having a plan, being consistent, and learning as you go.
And Lumis Capital, they're a great resource for all of that. I mean, between their reports and their website, they've got so much valuable info.
Super accessible, too. Definitely check out loomiscapital.com if you haven't already.
So much good stuff on there. Well, on that note, we'll leave you with one final question to think about. What's one piece of financial advice you'd give to your younger self?
Ooh, that's a good one.
Something to ponder.
Mm.
Remember, shaping your financial future, it's totally within your reach. Until next time, everybody,